5 steps to researching a stock trade before investing or trading. Once you decide which kind of business cycle the economy is currently in, you can start researching for a stock trade. It is good to have some sort of system in place that will be used regularly before each trade. Here we will explain the simple 5-step formula to help get you started. 5 steps to investing in online. Number 1. Find a better stock. This is the most difficult and most obvious step in stock trading. With well over 10,000s of stocks to trade, a good rule of thumb to consider is the time of the year. For instance, at the beginning of spring. It would make sense to consider stocks that traditionally make runs, or slide if you are bearish, during this time of year. Number 2. Fundamental analysis. Many of the short-term stock traders and forex traders may not agree with the need to do any kind of fundamental analysis. Nevertheless, knowing the chart patterns and structures from the past and the news regarding the stock is relevant. An instance would be the earnings season. If you are planning on playing a stock to the upside that has missed its profits target the last 3 quarters, caution could be in order. Number 3. Technical analysis. This is the part where indicators come in. The MACD, stochastics, volume, RSI, CCI, support and resistance levels, and all the rest. The group of indicators you choose, whether lagging or leading, may depend on where you get your training. Keep it simple when first starting out. Using too many indicators in the beginning is a sign of big losses. Get very comfortable using very few, 1 or 2 indicators first. Study those intricacies and you'll be sure to make better stock trades or FX trade. Number 4. Follow your trades. Once you have placed any stock trade, you should be track and managing them properly. If the trade is intended to be a short-term trade, watch and study it closely for your exit signal. If it's a swing trade, follow the indicators that tell you the trend is shifting. If it's a long-term trade, keep in mind to set weekly or monthly checkups on the stock. Use this time to keep up to date with the news, manage your price targets, set stop losses, and keep an eye on other stocks that you may target. Number 5. The big picture. As the saying goes, all ships rise and fall with the tide. Knowing which sectors are heating up stacks the chips in your favor. For instance, if you are expecting the price to go up on an oil stock and most of the oil sector is rising, then more likely than not you are on the accurate side of the stock trade. Many trading platforms will give you access to sector-wide information. So, you can get the knowledge you need. If you are interested in stock and forex trading, please visit our homepage to find out more useful stuff. Also, you can find our recommended brokers for stock trading and forex trading by visiting the links which we have mentioned in the description area. If you haven't subscribed yet, remember to subscribe. Also, hit the bell icon to get immediate update notifications. Thanks for watching. I'll see you next time.